Hey, Sue Bear here from Clear Pennies. I want to help you become the CFO for your own company. I have put together here a worksheet that may help you prepare your taxes as a business owner for your accountant. Now, maybe you have QuickBooks and you're giving them a profit and loss, but this supplemental schedule will show you may not have everything you need to deduct everything you want to deduct. So let's jump in. This business worksheet, you can fill this in, or like I said, give them the QuickBooks profit and loss, but you may have changed your business during the year. You may have changed it to an LLC, to a corporation. This is important for your accountant to know how to file you. Here is where you would put all of that information. You also may have gotten a new federal ID number, or you've added a federal ID number because you didn't have one before. So you would enter that there. And you also may have changed the type of business that you're doing. And so that's really also important for your accountant to know. And then some people operate their business with their spouse or with a partner. And so that's important for your accountant to know also, to allocate the income to each of you. Now, one thing the IRS has been cracking down on lately is if you pay a subcontractor more than $600 for services, you have to give them a 1099. The accountant has to sign off on this. Once again, your QuickBooks isn't going to tell them whether you did the 1099s or not. So this is where you answer that question so that they can answer that for you on the tax return as required for IRS law. One of the things here is the business income. A lot of people don't realize that you remove the sales tax from the business income because the sales tax, you collect it and then you pay it back out. So it's not really income. So make sure that your business income doesn't have the sales tax in it. Cost of goods sold, that is the items that you have purchased to then resell. Now, you may have QuickBooks, as we said, or another accounting software. But I want you to look down through all of these types of expenses and go, hey, wait a minute. I know I paid some legal and professional fees, or I know I paid this other expense, but then you're comparing it to your profit and loss in QuickBooks and saying it's not in there. So you could ask your bookkeeper, or you could check on your accounting and see why it's not in your QuickBooks and in your profit and loss. So look through all of these types of expenses and make sure that they're on your work paper or on your profit and loss for your accountant. Otherwise, they're not going to get deducted because how would they know, right? So keep looking down this, and this worksheet is also going to be in the comments for you below. There's all your expenses. Now, if you are going to deduct payroll, the accountant needs the W-3 and a payroll report showing the employer portion of your payroll taxes that you paid. So you're going to want to get that, or they're not going to know those amounts. Sometimes that's another thing that's not really correct in your QuickBooks, and they want to verify that because the IRS cross-checks that. Other expenses. Now, here's what I want you to be careful of too. Look down your QuickBooks and make sure there's not a category that says other expenses with a big, large amount without detailing them. We are not allowed as accountants to deduct an expense called other expense. So it has to fall into one of these categories. So make sure that's all categorized on your profit and loss. Also, don't deduct miscellaneous expense. To the IRS, miscellaneous expense doesn't exist. So make sure everything has a category. And once again, these are all your different kinds of categories that you will be using. Now, another thing that's important is what if you bought some new equipment during the year? Make sure you list that out because they're going to ask you about that. So you might as well preemptively know that. Say, how did you know that? And you have this all listed out. Then a lot of people know that you can deduct an office and home. That may also not be on your QuickBooks because those are expenses that you paid personally and not necessarily through your business. So this is a great office and home worksheet where you can give your square foot that you use and the square foot total, because people always say, well, my office and home is like 20%. Well, how do you know that? So you do this as prorated amount. You come up with a percentage by the amount of square foot used over the total square feet. Then you list out all these other expenses and put them at 100%, and the accountant will do the calculation for you based on the percentage. And this is a thing for 2022 that's kind of important. So on your QuickBooks or your profit and loss, you may have auto expenses listed, but we can only deduct The other important thing to get to your accountant is your auto. And you may have auto in your QuickBooks and some auto expenses, but they need a whole lot more than that to actually deduct the auto. And this year for the 2022 taxes is a little bit more complex because they split that you actually have to know the business mileage from the beginning of the year till June, and then from July 1st to December. Can you imagine that? Well, that's because the gas prices went up. So here's what the accountant needs to know in order to deduct auto for you. So type of vehicle, the make, when you purchased it, and you may have purchased something new and they didn't even know that. They just maybe see on your profit and loss that you have like $4,080 worth of auto, but they don't have this backstory detail about your vehicle. So list that out here, and you may even have 2 vehicles that you've used for business during the year. The thing is, you have to know per vehicle how many business miles you did. Because you can't just say, oh, my auto was 50%. Well, what are you basing that on? Just like the office and home, you have to kind of know the percentage. So you're going to know your total miles driven and then your business mileage. And yes, it's a little bit of a pain. You have to know for this part of the year and that part of the year. These are some of the other questions that the IRS actually asks, and maybe your accountant never told you there's these other things that they ask for. They need to know if you have another vehicle for personal use, if you've used it as the owner or a related person. So it's not just like it's your kid's vehicle. So they have to answer these questions. And then is the evidence written? Meaning, do you have a mileage log? And an app is fine. You can use an app for tracking your mileage, which I highly suggest. Is the vehicle leased? That's another important thing that they need to know. Now, here's where you can write off the actual cost. So you write off auto 2 different ways. You write it off by the mileage method, or you write it off by the actual cost. And it's important for your accountant to compare what method is better for you. Are the costs of the total vehicle and all the gas and the maintenance and the insurance the better write-off, and the lease payments? Or is it better off to just write the mileage off? They can compare this out and give you the best benefit. All right, I hope that you found this helpful. If you could hit the like button and subscribe, and then look down below and you'll find this worksheet. I hope you find it helpful. Thank you.